the federal government just approved the 2026 budget
of 58.18 trillion naira, in which 15.52 trillion naira
of this budget will be consumed by debt financing. Also, this 2026 budget has a projected deficit
of 23.85 trillion naira, meaning that the expenditure far surpasses the expected revenue by 23.85 trillion naira, creating a negative balance that must be financed through borrowing, adding to the national debt.
The passage of this budget raised so many eyebrows from the economist community. Major concern about this budget borders on the percentage that goes into debt servicing, the deficit in the budget, the hasty time it took for the budget to be approved, and how the expenditure was appropriated that did not suit the reality of the present economy. So on this video, I will highlight the budget appropriation mix and compare it to previous year's budget. How loan servicing has swallowed about 30% of this 2026 budget, the irregularities in this budget, and how this budget will affect us as investors and also consumers going into the year 2026. On this budget, the federal government has projected
a total revenue of 34.33 trillion naira
for 2026, with 22.6 trillion naira going to the federal government, 16.3 trillion naira going to the state government, and 11.86 trillion naira going to the local government. The federal government share of revenue from all sources is projected at 34.33 trillion naira, including 4.9 trillion naira expected from government-owned enterprises. The Minister of Budget and Regional Planning says this figure is 16% lower than 2025 revenue estimate. He outlined that pending areas include statutory transfers of 3 trillion naira, non-debt recurrent expenditure of 15.27 trillion naira, and a debt service burden
of 15.52 trillion naira.
Based on the proposed pending proposal, which is the national budget, debt service alone will consume
26.7%
of the entire 2026 budget. In the most simplest term, this means that almost 3 of every 10 naira that the government expends on the nation goes into debt servicing.
Of this budget, 5.41 trillion naira goes to defense and security. This is to accommodate the planned massive recruitment into the military, police, and other security agencies. With the massive kidnapping, banditry, and terrorism in the country, is this going to be enough? Well, I don't think so. The projected deficit of 23.85 trillion naira accounts for about 41% of the entire spending plan for 2026.
The size of the shortfall means Nigeria intends to borrow more than 1/3 of its planned expenditure for the year. The contrast with earlier budgets is quite striking. That is, if you compare the similarities or the differences of this budget, previous year's budget, the difference is really large. The 2025 budget signed into law by the president was 54.99 trillion naira, which was slightly larger than the 2026 pending proposal. The 2025 plan carries a lower deficit of 9.22 trillion naira and a debt servicing provision of 14.32 trillion naira. The deficit planned for 2026 budget is more than double that of this year, 2025, and reflects an increase of about 118% on the deficit of this year's budget. The amended 2022 budget under the past administration, that is President Muhammadu Buhari, was 17 trillion naira. Debt servicing then was at 3.98 trillion naira. So when compared with the 2026 proposal of 15.91 trillion naira, you can see that it is 11.93 trillion naira higher, representing a huge increase of about 300% in just 4 years. So you see the large margin in the difference of the debt servicing figure for last administration compared to this administration compared to 2026. This speaks volume of how much or how high the debt that has been acquired is and how we are servicing the debt with the national budget, leaving room for little or fewer resources to take care of capital expenditure that will reflect positively in the growth and development of the economy. If you can relate to any of this and you are getting value from this video, please hit that subscribe button now, and don't forget to like and share this video with that person you know that needs to see this. So now let's get back to the video. So the heavy dependence on borrowing saw the national debt balloon to 152 trillion naira as of June 2025, up from 97 trillion naira in Q4 of 2023. With untimely budget execution threatens Nigeria's debt sustainability and signals weak economic governance amid challenging global economy. It's safe to say that Nigeria has borrowed well into the future without ensuring its ability to repay its debt. It has been highlighted that Nigeria risks sliding into deeper fiscal stress if the government does not tighten its expenditure planning, increase efficiency, and will establish a credible budget calendar. This rising deficit and mounting debt obligation could put the fragile economic stability recorded few years ago in a setback and could boost pressure on household and business for the coming year.
You might think the 2026 budget is the largest so far in the history of our country. Well, you are right in naira terms, but in dollar denomination, they have been almost the same, ranging from $39 billion to $42 billion in the last, say, 5 years.
The Minister of Budget and Regional Planning projected a growth rate of 4.68% for 2026 and warned that increased political spending in the run-up to the election could heighten pressure on the exchange rate. Given that 2026 is the pre-election year, there's a lot of election activity spending that can typically affect the exchange rate. The president called for more collaboration between fiscal and monetary policy. Hence, the Mid-Term Expenditure Framework and Fiscal Strategy Paper, which is a statutory 3-year fiscal guide, was set up. This will assume a gauge on the 2026 appropriation bill, including oil output benchmark at $64.85 per barrel,
an exchange rate of 1,400 naira per dollar,
revenue profit of 50.74 trillion naira, deficit limit, and the spending mix of the economy. So many finance experts have raised concern over the federal government plan to run a 20.1 trillion naira deficit in 2026, saying the level of borrowing, the timing of budget preparation, and the irregular fiscal calendar could undermine macroeconomic stability and worsen investors' confidence. The deficit, which represents more than one-third
of the 58.18 trillion naira budget,
makes for fresh concerns about debt sustainability, fiscal discipline, and the government's ability to manage inflationary and exchange rate pressure in 2026, because the high level of deficit and high levels of debt can choke the fiscal space and lead to a kind of vicious circle of a debt trap. Being that we are celebrating the recent macroeconomic strength, any disruption could quickly worsen inflation and exchange rate pressure. we can all see that we already have a reasonable level of macro stability, and once we lose that recovery, it will create even more problems, because that is where the problem of inflation pressure will come, and that is where the pressure of the exchange rate will also come in. According to the Minister of Finance and National Planning, since the revenue yield is increasing, the government should take advantage of these gains to cut deficits rather than expand it. We should leverage on improved revenue to moderate the level of deficit and the level of debt exposure, so that we won't put at risk the macroeconomic stability that we have achieved so far. So let us do this simple math to know what will be left in the 2026 budget for the government to carry out structural development in the nation.
Of a total expected revenue of 34.33 trillion naira, if you take out a debt servicing expenses of 15.52 trillion naira,
then take away its lofty overhead to run the government, this leaves scanty resources for capital investment essential to growth. This proposed deficit likely means the government already plans to borrow about the scale of the gap, combined with high debt servicing bill. This signals a more difficult fiscal year ahead. This is why Nigerians have yet to feel any significant impact of about 107 trillion naira budget appropriated since 2023. While the government continues to fund its humongous overhead, Nigerians are denied critical infrastructure, social goods, and other support systems that every nation and every citizen enjoys from its nation. This is unfair amid the untold deprivations ordinary citizens have to endure due to the government's reform policies. If the government does not handle this debt acquisition and deficit planning with extreme caution, the systemic effect of macro stability would be catastrophic, which could lead to increased interest rates, affecting private investment and tightening the economy, and could also lead to weakening of the naira, that is currency devaluation, thereby causing massive inflation, leading to increased prices of goods and services. So with this, I believe that you've known how this 2026 budget would affect you, whether as an investor or as a consumer moving into 2026. It is now left for you to sit up and make necessary adjustments where need be, just so that you can ride with the wave of whatever it is that will happen in 2026, which for the most part is not something that is commendable. So I trust that you've gotten value from this video. Kindly do well to subscribe to this channel, like this video, share this video with people around you that may know little or nothing about how the 2026 budget would affect their livelihood. I trust that you do well with this information, and I'll see you on the next video.